You guys know if you were watching the live show, I was waiting to see how this weekly bar would print, and it is suggesting that this has a high probability to be a major top right now. Now, is that going to be a correction or is it going to be a crash? Well, this is a crash signal, and we'll have to pay attention to some other things, but I think we still need to pay attention to the other direction just in case, because we're actually going down in this area because of the potential for rate raises that people think that are coming, and the Fed is not in the place to do that, right? A lot of the time, the market is going to more so top on good news, not bad news. So this will be very interesting, and maybe those yields actually start to back off, and we'll take a look at those today. But I just want you to understand that this is highly probable to be a major top in some way, and we're just going to pay attention to the other direction because we've been talking about for the past couple months how 2025 is going to be very choppy and most likely end up in the downward direction over time in some kind of rip around kind of market. Why? Because of the confusion that comes with 2025. Look at the confusion that you're getting right as we enter into 2025 as far as it goes with tariffs, as far as it goes with the data. We have strong jobs data, and the market starts to go down too. It's just there's a lot of confusion that can come with 2025. So that means we still have to pay attention to both directions. And the other part to that is this. If this is some kind of major top, that's fantastic. Volatility will increase and we will be able to catch big bounces and big drops. And that's all we need to pay attention to going forward. So make sure you're subscribed for Sunday, because that means we're going to need to pay attention to these shorter time frames. So let's get into some things today. Let's talk about the fact that this has confirmed. We're going to talk about the signals with it. And we're also going to talk about why the daily chart is saying we actually could end up heading higher in the near future. Let's get into it. First thing I want to say, I know a lot of people will come out and be like, you're saying that this is going to possibly head higher. Yes, there are probabilities that say this could head higher. You do not have technically daily market top type signals up here, which is very interesting, but you have confirmed the weekly one. So we are treating it very seriously as that has become more significant. Notice flat, 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 then it becomes significant. That is when we pay attention. That has confirmed. Flat, flat, flat. That is the weakening in momentum. This is saying, okay, the momentum is very, very weak for the RSI and the MACD at the same time. And we were waiting for the Qs because we thought they would be a good indication, as the SPY had already done that. The SPY has already done it. Now, one thing I want you to notice about this weekly chart for the SPY is that is a almost flat divergence there at the top, but very significant on the RSI. So we will be paying attention to it going forward. Now, starting off with the SPY here, we're going to jump back over to the Qs. I just wanted to talk about the other side. We have touched the bottom of our channel. We could head up in the upward direction for the SPY because of one reason. The daily scale does not have the reversal signals that you normally see at market tops. We talked about that right here. We said, yes, this is flatness. Yes, this is flatness. We can see some kind of drop with the consolidation. Wait for the info and see if that breaks. And it broke to the downside and we really went down. We've caught these bounces in here. That's fantastic. And we are overall consolidating towards the bottom of my channel. And no, I haven't moved this line at all. And you can see that we are still within that channel. Now, I'm not someone who reads into the lines on the chart as much, really. I really don't. I look for good signals. If it violates my line and there's still a good signal behind it, hey, there's a high probability we could bounce from those levels. So we're going to pay attention to the shorter time frames in here because the shorter time frames look pretty damn beat up. But one thing I just want you to pay attention to, for whatever reason, remember the confusion. If people start to get less confused for some reason, meaning maybe CPI on Tuesday, hey, if this thing curls up, where is it? It's really close to the center line. I still want you to overall not be reading into the narrative, but reading into the signals. And if the signals keep turning down, okay, awesome. You're in a negative trend. Look for your trade setups. If this daily scale turns up, though, what is a very likely thing to happen? Well, it's actually very likely that we actually head to a new all-time high. Is this overall done? We'll have to find out going forward. The weekly suggests that the Qs have more work to be done. You do notice we did close slightly outside of the weekly expected move. So you would expect, hey, on Friday, if this is really, really bad, we must be turning really far down. We actually don't do that. We do have a gap below us that we easily could have filled and things like that. We didn't go down to it. Maybe there's more work to be done here, but I really just want to get it in your head. Hey, if that daily scale starts to turn up with a positive green bar like this, I would be very cautious thinking that this has to fall down. The way that we're going to do that is we're going to pay attention to the shorter timeframes and tell you what you're looking for in here for this to break through the channel on Sunday. So make sure you are subscribed so you can get that info. Popping back over to the Qs, we can see a very similar setup, and look at the Qs. They are even better positioned to have a positive move if you just curl up on the daily scale. Look at that weekly expected move coming in very, very nicely. Really looked like we were going to head to the upside. We see that confirmation down. We showed you the volatility that was showing reversal signals right in this area. We posted that to Patreon and bam, to the downside. So we have some big stuff going on here. There was one volatility signal that gave us a hint, and that one signal ended up being correct. We head down to a weekly expected move, but what is the positioning of the MACD telling us here? And what do we not see on this MACD? And what do we not see on this RSI for the Qs? And also on the SPY, but we're just jumping over to the Qs real quick. We do not see divergence here at the highs. We have flat divergences just on the RSI. Those happen all the time for pullbacks and stuff, but this could be a corrective move, and I still want you to pay attention to that because it seems we are going down for a different reason than we're supposed to necessarily. Like, we're supposed to be like, hey, the inflation is going to possibly be taken care of and the rate cuts are going to come in, and then we're actually going to end up seeing those rate cuts as bullish, and then actually those are going to be the reason that we end up falling. Remember that the SOM rules going. Remember that we actually have these 6 to 18 months with the 3-year or the 10-year 3-month actually crossing, so you have an inversion. There's a lot going on here that is very weird for us to be dropping at this moment. So I just want you to be open to it. I'm not saying it has to end up in the upward direction. I just want you to continue to trade like water. If you've been a part of this channel for a while and you've been trading like water, you've maybe changed a few things because you've just heard some stuff and you maybe found it a little bit helpful and it has helped you out, then continue to do so. So if this daily curls up, you can see positivity. Where is that? By the center line, which means we can end up testing the high and going to make a new one, even if we have a crash signal on the weekly showing itself right here. Pay attention to both sides. These things can happen all the time where you get a signal to confirm, it whips back the other way, and then you get it to confirm again for one last trap. And I would seriously be paying attention to that at this moment because we keep seeing these wicks come in after these big sell-offs, and we have stocks that are actually holding up better, such as something like Meta. If this is overall something horrible and it's going to leak into the whole market and the whole market is crashing, we should not see Meta positive. We shouldn't see little stocks like DJT positive. If it is going to affect stocks, and we are saying inflation is going to absolutely crush everyone, and this is going to lead to people not being able to spend their money at all, which is what the inflation scare really says, we shouldn't see these stocks getting 2.23% bounces. We shouldn't see stocks like Meta being positive. We really shouldn't. And so I think we genuinely need to pay attention to possible upside moves still, just in case. And if we keep turning to the downside, we can just play how we normally do, right? If the trend continues to be negative, we look for those bounces. We look for positions to get into. We never jump into anything in YOLO, into something that could be a stock market crash right now. But it really looks like, to me, we don't have the structure on the daily. For the structure on the daily, we want to see from the Qs maybe a lower high or a divergence, and then that would give us some reasons for that. For the SPY, we want to see on the daily scale a actual divergence here, or something like that. Actually, for the SPY, you really want to see a divergence, okay? So for this, I'm paying attention to it as we're at the bottom of the channel. I know we've jumped around a little bit in this video, but it's just to display to you, hey, we don't really have the structure we normally have on the daily scale, so watch out if we go make that structure. If we don't, we can just continue to trade the negative trend with those weekly signals confirmed. And a big reason for this is our stocks like Apple. Apple genuinely does show you great signals at market tops. And what do we have now? We don't even really have those signals. We just have a simple tiny divergence here on the RSI that led to a big drop. That's fine. We were saying in these areas, watch out, because we could go test 236.36 at any time. You can go 3 weeks back and look what we were talking about right here. And we were saying, yeah, I just watch out for 236.36. We're probably going to end up going there. You're getting pretty high up on this MACD. And then what happens? We go to 236.36. We actually hit exactly on a monthly expected move here, and we closed right on or just below the weekly expected move. But the important thing is we saw buying pressure take us back above 236.36. Why is that level very important? Well, if you notice, we really struggled to break through that level, and when we did, we really saw that positivity kick in. But a lot of stocks like to come back and retest those important levels if they want to try to head in the other direction or in the same direction of the trend as of now. And what is the trend overall for Apple? It is still bullish. Okay, I know this is dropping down dramatically. I get it. We're getting the test of 236, but you don't have good reversal signals here. So I am going to be paying attention to Apple. And weirdly enough, Apple can end up back towards 260 by the end of January. So be paying attention. If it's not going to head up towards 260, well, then this weekly chart makes sense. You have weekly divergence that is kind of flat, a little bit down. So this would make sense to keep dropping, but you have a weekly 20 there. If we're going to continue to drop, this is where the shorter time frames will be very important, because most likely we are going to see some kind of bounce, or at least for an opportunity. We need to be patient for some kind of the bounce, whether that happens there or whether that happens here, and then we can actually find some kind of opportunity. Because if we're jumping into plays, I'm just going to do this on one chart here. If we're jumping into plays down at these type of levels, well, you are extremely oversold. Well, if you're going to keep crashing, okay. If this is actually going to be a random, just big crash, okay. But for now, look at the 2-hour RSI, look at the 2-hour MACD. These things are very beat up, and they are in an area where they bounce a lot of the time, which just means for us, we can pay attention to those bounces. And if they fail, that might be the next actual opportunity to continue down the negative trend. So all I'm talking about here is keeping a level head going forward. Yes, we have confirmed those signals down, but we have a weird structure as far as the daily goes. As far as the signals go on the daily scale, they still are telling me, hey, watch out in case we make another upward move, because this could be a trick in some way, even though other things are saying that it's not. The other things saying that it's not, I know we're bouncing around a little bit in this video, but I hope you're sticking with me here, because the other things that are saying it's not is the dollar. The dollar is saying if we're going to see most likely some positivity from the market, well, you're going to most likely see the dollar need to drop off here. You're going to need the yields to also drop off as well, that are very close to curling up on the monthly chart. So we'll be paying attention, but let's really look at the dollar here. Have we gotten rid of all of the signals that say we could still see the dollar pull back in the month of January? Let's look at the daily scale. This is your crash indication saying, hey, you most likely will see some kind of market top in January. And we just saw those signals confirmed for the Q. So pay attention to it seriously. I'm just saying the daily structure is not really there for your indicators to suggest this is a serious market top at this point. So just in case something kind of rigged happens, be open to both sides. That is not a bad thing to do as a trader. Trading like water is a very good thing. You will pay attention if that crosses up, and it can save you from a lot of risk if you're going to see some kind of upward move. So one thing I wanted to point out here is the daily signal for the dollar is still overall holding, right? We've seen this signal for the dollar come in. We see divergence all the way across. We've held flat on those divergences at these levels, and then we actually see this downward right here. So you do still have divergence on the dollar. That thing can drop down. Also, the market can continue to go up even if the dollar goes up, but I think you are due for some kind of test here. We'll see what happens. Pretty much it's like this. If the dollar keeps scaling up, we're probably not going to see new all-time highs. If the dollar can cross down, we might actually see new all-time highs. And right as everyone are thinking that the yields are going to sky off to oblivion, we are still holding the divergence point as of right now. The main divergence point, you are still holding it. So just be cautious. If the 10-year starts to turn down all of a sudden, people might change their tone, and all of this fear might end up turning into positivity. All of this confusion might lead to people thinking they're actually seeing things very clearly and then willing to buy stocks again. So I just want you to be open to upside. I don't want you to be one of those people who just watches 10 stock market crash videos and doesn't hear the other side of things. Yes, you have confirmed those signals. And if those signals continue to be bad, you will still find opportunities for bounces. You will still find opportunities to take a good position during the downfall. Right now, we have a lot of stuff sold off, so they could end up bouncing in some way. And I just want you to be aware if daily scales start to turn up and if the 10-year yield actually starts to turn down on the daily scale, because this is suggesting that yes, this can violate these divergence points. We can continue in the upward direction, But if we're actually going to see this cross down, people might be dead wrong on these rate, this rate discussion. Now we're going to click through some stocks and just show the daily scale and show how we actually are still in positive trends a lot of the time, right? If we are crashing down and those weeklies are crossing down, which a lot of them are, we should be crossing that center line. So do we have a chance, or do we need more time maybe on Monday and Tuesday to see if these things continue to cross down? Well, as you can see, the daily scale for Apple still has positive trend overall. We are still above the center line. So if that daily crosses up, I need to be ready to react in some way. Tesla, as we go look at that, that is still in an overall positive trend with no reversal signals up here as far as divergence goes, but you do have a short time frame lower high, so we'll pay attention to it. But this does say, hey, if the daily curls up for this, then we are in a positive trend and we can go test these highs and go make a new one, so be paying attention. Amazon is still in a positive trend with no reversal signals up here. And if you're really looking at Amazon and you're going, hey, yeah, this is some kind of crash, a crash does not hold structure very well at all. And this just looks like a flag. So if we violate that flag, then we can talk about it further. If we start to go through that center line, we can talk about it further. But right now, even Amazon just looks like a flag to me, and this could end up going in the upward direction. I see that things have confirmed for crash signals, but I'm still going to pay attention and trade like water. If those dailies don't turn back up, none of this will come to fruition, and that's perfectly fine with me. I'll be playing other things. As we can see, Nvidia's still in a positive trend as of right now, trying to go positive here. If that would confirm down, that would be a lot worse, right? That would say we are going to make a new low, and we'll pay attention to 125 at this level. If we go look at something like Meta, that thing is still curled up into positive territory and having a positive day on Friday. So are we really crashing if this big stock like Meta isn't crashing with it? It looks like we have some indecision from Meta, which is very, very cool. Remember, Meta is the one we're really paying attention to give us the signal, to give us the signal of weakness. And that hasn't really happened yet. If the daily can confirm down, yeah, that might be the case. But right now you can see the confusion from Meta very, very well on Friday. People are confused, and that is a big thing that is going to happen throughout 2025. We can even see from stocks like Microsoft a little bit deeper into negative territory, but trying to make some kind of double bottom. We see the stocks like Google that are overall just moving sideways in a serious bullish trend still, with no reversal signals up here on the MACD or RSI at all, just moving sideways, buying time here to where this thing could just curl up and we could see an upward move. So I am just very hesitant. If all these stocks that I just showed you are still saying, hey, we are still able to make another positive move on the daily scale, then what should I be thinking if the daily scale turns up? I should be thinking, hey, this could be some kind of bullish move. There maybe was some kind of bear trap, and we're going to see an upward move to maybe get people a little more euphoric on stocks, maybe some kind of blow off moment, and we're actually going to see a lot of the confusion subside. So we'll pay attention to that. But I just wanted to show you a lot of those big stocks to say a lot of them are still in positive territory on the daily scale. And if we're curling over on weeklies, usually we want to be starting to go negative on those dailies. So if we start to go negative, maybe we can read into that. But if we turn around and go positive, I want you to be very aware that we are in a positive trend right now on a lot of daily charts, and that can end up taking you to test the highs or go to new all-time highs. And you need to be paying attention to that. While everyone is thinking stock market crash, think about both. There's no harm in doing that. Now, I did want to do a little update on AMC and GME just because we did confirm the signal and we got rid of the signal. Now, we were aware of the 2-hour crossing down. We're going to talk about this more on Sunday, so make sure you're subscribed, and we're going to update this level for you. But you still need this to be positive and go into positive territory. But the main thing from these guys that I wanted to talk about was GameStop. GameStop actually did not. Remember, we were paying attention if the daily was going to confirm here on the MACD. That did not happen. The 2-hour did confirm divergence here, but notice how well it is holding at this point. If that starts to change and the daily crosses down, that means bad things. That means a test of 2835. If you start to lose that, that's not good. But as this 2-hour is still positive, we can see another curl up. It's kind of like we were talking about with the daily scales, they don't have reversal signals. The difference here is GameStop does have one, so it's more likely to go negative here. But if that curls up into positive territory, we're going to have the new level for you next week. This stock is getting very interesting as it holds up really, really well. You wouldn't expect in a crash time for people to really be wanting to hold on to a little game store stock like GameStop. You just wouldn't expect it. So the fact that this is holding up better is kind of interesting to me, and I'll be paying attention if this 30-minute can turn back up into positive territory, and then that will be a good signal. But be aware that the daily scale is showing some serious divergence here. I want you to be paying attention to both sides. I want the thing to go up, but if this starts to confirm, hey, that means that we are more likely to see a test of 28.35. Just to reiterate towards the end of this video with the main takeaway, I just wanted to put up volatility on the weekly scale and just show how that is seriously curling up. That is curling up right now above the 200. This is something to be very worried about. I want you to still pay attention to both sides. This is very important as we go into confusion, which what usually causes, or what usually happens in price action with confusion, bear market volatility, bear market behavior. And this is something that we go over in the course very thoroughly, right? If this is going to turn up, then we can follow everything in the course and it will be perfectly fine. And that course is still on a discount for this reason. The reason that I extended it for all of January is because in January, I thought we were heading to a market top, and I want people to be able to learn. I want you to be able to understand how these stocks are going to move in a bear market, and paying attention to momentum can really, really help you. And usually a bear market will happen when there is serious confusion, and you see that confusion right now. So it truly will benefit you to take that this weekend, and then you can come into this and say, hey, if volatility is higher, I'm all for it, right? I want volatility to be higher because I make the best money when volatility is higher. So I want to share that with you. And if you have questions about it, you can come to the live show and ask, but treat this very seriously. I'm not talking about the fact that these things aren't confirming. They are confirming as of this week. We need to seriously discuss how this could be a major top right now, but I just want to be paying attention to the daily in case there is some kind of trick there. And the reason that I'm pointing that out and not just going to tell you crash, 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 crash is because if that daily were to turn up and you are caught off guard by it, you can lose a lot of money. And that's why I'm talking about both sides here. I am treating these indications very, very seriously. I do not have a position as of right now. I'm not taking a position in volatility because of the weekly cross up. I'm waiting for structure from the SPY and the Qs as they are oversold on 2-hour charts to give me the opportunity to short or give me the opportunity to go long. And that's what I'm going to do from this point forward. That's why I was sitting on my hands on Friday. Thank you guys so much for watching this video. I know we jumped around a lot, but I hope you understand the main take here is, yes, we have weekly crash signals confirming, but we do not see that structure we normally see on the daily, and we're actually holding up very well comparatively for a lot of stocks. And the ones that are dropping deeper are the ones that just saw the bigger upward moves and needed to retest those breakout areas. So be paying attention to both sides. If things start to bounce up and then they fail, that's when we have opportunity. If things start to bounce up and they cross on the daily, that's when we see opportunity. Trade like water, manage your risk, and you will be just fine. Thank you guys so much for watching this video. Make sure you tune into Sunday's video for the shorter time frames to get those weekly expected moves for the SPY and the Qs. And thank you so much for being a part of this community. I hope you have a great weekend. Peace out.